Tesla is everywhere. It's become a ubiquitous presence in our modern world, a testament to its innovative spirit and growing market dominance. You see them gliding silently through traffic, a sleek symbol of the electric revolution, on the streets weaving through cityscapes and cruising down highways. They're not just cars, they're a statement about sustainability, technology, and the future of transportation. In conversations buzzing around water coolers and debated in boardrooms, everyone seems to have an opinion on Tesla, its charismatic leader, and its ambitious goals. And all over the news, thanks to Elon Musk. His vision, his tweets, his relentless pursuit of innovation, it all keeps Tesla in the spotlight, captivating the world's attention. For many, Tesla is more than a company. It's a symbol of innovation and the future. It represents a shift towards cleaner energy, a commitment to technological advancement, and a bold vision for a better tomorrow. The Tesla effect has made it a magnet for investors and enthusiasts alike. It's a company that inspires passion, loyalty, and a belief in its long-term potential. People aren't just buying stock, they're buying into a dream. I remember when owning Tesla stock felt exclusive, like being part of a select group of forward-thinking individuals who saw the potential before everyone else. Now, it's one of the most popular stocks in the world. Accessible to almost anyone with a brokerage account, it's become a staple in many investment portfolios. What drew me in wasn't just the cars, as impressive and technologically advanced as they are. It was more than just the sleek design and the promise of a greener future. It was the chance for regular people to build real passive income, to participate in the growth of a groundbreaking company and reap the financial rewards. The idea of generating income while I slept was incredibly appealing. My goal was simple: to create a consistent stream of income that would supplement my existing earnings and provide a greater sense of financial security. Make a few $100s a month, a modest target perhaps, but a tangible and achievable one that would make a real difference in my life. Now I'm earning over $300 monthly, and it's been consistently growing. It's a testament to the power of long-term investing and the potential of a well-chosen stock. From my Tesla investment with a straightforward strategy, no complex algorithms, no risky bets, just a simple, disciplined approach to building wealth over time. This isn't about risky day trading or overnight riches. I'm not chasing fleeting gains or trying to time the market. That's a recipe for stress and potential losses. It's about patience, a virtue often overlooked in today's fast-paced world. It's about understanding that building wealth takes time and consistent effort, discipline, and leveraging a company with massive potential. A company that's not just building cars, but also revolutionizing energy storage, solar power, and artificial intelligence. Think of it like owning a rental property, a tangible asset that generates income over time. It requires an initial investment, but the potential for long-term returns is significant. But instead of tenants, you're collecting income from shares, from the dividends that Tesla distributes to its shareholders. It's a more passive and less management-intensive way to generate income. I'll show you exactly how I did it, the steps I took to build my Tesla investment and generate a consistent stream of passive income. My thought process, my step-by-step strategy, and real numbers from my portfolio. I'll share the data, the analysis, and the insights that have guided my investment decisions. By the end, you'll see how building wealth with stocks is possible for anyone willing to learn and stick to a plan. It's not about luck or insider information. It's about knowledge, discipline, and a long-term perspective. Most people see Tesla as just an electric car company, a manufacturer solely focused on producing innovative vehicles. They admire the sleek designs, the impressive performance, and the cutting-edge technology packed into each model. But that's only the beginning. It's merely scratching the surface of what Tesla truly represents and what it's capable of achieving. Tesla has revolutionized the auto industry, disrupting traditional manufacturing processes and setting new standards for electric vehicle performance and design. With the Model Y among the world's best-selling vehicles, it's clear that Tesla's impact extends far beyond just early adopters and tech enthusiasts. The Model Y has become a mainstream success, embraced by families and individuals alike. Their gigafactories are producing cars at a staggering rate, utilizing advanced automation and efficient manufacturing techniques to meet the ever-increasing global demand. And demand keeps growing, fueled by increasing awareness of climate change, government incentives, and the undeniable appeal of Tesla's vehicles. The future looks bright for electric mobility, but Tesla is much more. It's a multifaceted company with ambitions that stretch far beyond the realm of electric vehicles. It's a technology and energy powerhouse, a driving force in the transition towards sustainable energy solutions for the entire planet. Their battery tech leads the industry, constantly pushing the boundaries of energy density, charging speed, and overall performance. They are at the forefront of battery innovation, powering not just cars, but a whole ecosystem of energy solutions designed to reduce our reliance on fossil fuels, but homes and utilities, providing clean and reliable energy storage for residential and commercial applications. With products like Powerwall, which allows homeowners to store solar energy and reduce their dependence on the grid, and Megapack, a utility-scale energy storage solution that can stabilize power grids and integrate renewable energy sources more effectively. Tesla's data and AI efforts, especially full self-driving, are not just about making driving more convenient. Are game changers poised to revolutionize transportation and create entirely new business models, with every car feeding data, contributing to a massive neural network that learns and improves the autonomous driving system. To improve autonomy, making the roads safer and more efficient for everyone. The vision? Fleets of robotaxis providing on-demand transportation services at a fraction of the cost of traditional taxis, and even robots like Optimus designed to perform repetitive and dangerous tasks, freeing up humans to focus on more creative and fulfilling endeavors, opening up massive new markets and transforming industries beyond anything we can currently imagine. When I invested, I wasn't just buying into cars. I was investing in a future powered by sustainable energy and intelligent automation. I was buying into a diversified tech giant, a company with its fingers in multiple pies, each with the potential for significant growth. Tackling energy, AI, and robotics, the core technologies that will shape the future of our world. This diversification means Tesla isn't dependent on car sales alone, making it more resilient to economic downturns and market fluctuations. Multiple growth pillars make it a stronger, less risky investment, providing a more stable foundation for long-term returns. For investors, that's a foundation for long-term success, a chance to participate in the growth of a company that is truly changing the world. That's why I chose Tesla for my strategy. It aligns with my vision for the future and my desire to invest in companies that are making a positive impact. My approach to investing is simple and consistent: no heroics, no market timing. I picked a fixed amount, $500 a month, to invest in Tesla no matter what. This method, called dollar cost averaging, removes emotion and automates the process. Whether the stock is up or down, my investment goes in on schedule. This protects me from panic selling or FOMO buying. I'm not worried about short-term price swings. I'm focused on where Tesla will be in 5 years, 10 years, or 20 years. Each monthly investment is like laying another brick in my financial foundation. Over time, these bricks add up to something substantial. Patience and discipline. Our key wealth is built by repeating good habits over years. By sticking to this plan, I steadily grew my Tesla position without stress. This foundation enabled me to start generating $300 a month in income. It all started with a simple, automated plan. Navigating the stock market can feel like a roller coaster, especially when volatility spikes. But what if I told you there's a strategy that can help you stay calm and build wealth regardless of market conditions? Dollar cost averaging, DCA, is the engine behind my investment strategy, and it's a game changer. Instead of trying to guess the perfect time to buy, which is nearly impossible even for seasoned professionals, I take a much simpler approach. Timing the market is a fool's errand, often leading to anxiety and missed opportunities. I invest a fixed amount regularly, $500 each month without fail. This consistent approach removes the guesswork and emotional decision-making from my investment process. It's a systematic way to build wealth over time. When prices are low and the market is down, I buy more shares. This is where the magic of DCA really shines. You're essentially getting more for your money when everyone else is panicking. Conversely, when prices are high and the market is booming, I buy fewer shares. This prevents me from overpaying during market peaks and helps maintain a balanced portfolio. Over time, this averages out my cost per share, reducing my overall risk and creating a smoother investment journey. It's like having a built-in safety net for your portfolio and significantly reduces the impact of market volatility. The ups and downs become less daunting, and your investment strategy remains consistent. For example, if Tesla's price fluctuates wildly, as it often does, My consistent $500 investment buys different amounts of Tesla stock each month depending on the current price. Some months I might get a lot of shares, other months just a few. But the beauty of DCA is that my average cost per share gradually smooths out, mitigating the impact of those dramatic price swings. DCA is an especially powerful strategy to employ with volatile stocks like Tesla or any company prone to significant price fluctuations, where news cycles and market sentiment can cause constant and often unpredictable price swings. It helps you stay the course amidst the noise. For day traders, constantly monitoring these fluctuations is incredibly stressful, requiring split-second decisions and a high tolerance for risk. But for DCA investors, all that daily market chatter is just noise. We're focused on the long game, not short-term gains. DCA cleverly turns market volatility into an advantage, allowing you to accumulate more shares at lower prices during downturns, and perhaps most importantly, removes emotional guesswork from your investment decisions. You're following a systematic plan, not reacting to fear or greed. The result? A greater sense of peace of mind, knowing that you have a solid strategy in place regardless of what the market throws your way, and a laser-like focus on long-term growth rather than getting caught up in short-term market fluctuations. You're not constantly second-guessing your decisions, wondering if you should buy or sell based on the latest headlines, or stressing about the daily moves of the market, because you know that your consistent approach will pay off in the long run. This simple yet powerful strategy has worked for decades, proving its resilience and effectiveness across various economic cycles. In all market conditions, whether we're experiencing a roaring bull market or a challenging bear market, it's an all-weather strategy. It's simple to understand, incredibly effective in practice, and perfect for anyone wanting to build long-term wealth and secure their financial future, regardless of their investment experience. Without having to be glued to the market, constantly checking prices and worrying about every little fluctuation, it allows you to live your life. That's why I rely on dollar-cost averaging as the cornerstone of my investment strategy. It's a reliable, time-tested approach that gives me confidence in my financial future. Let's look at my real numbers over a recent 90-day period. Before March, I'd built up 100 Tesla shares at an average cost of $210 each, $21,000 invested. On March 15th, I invested $500 at $225 per share, adding about 2.2 shares. In April, the price dipped to $205, so my $500 bought 2.4 shares. In May, the price rebounded to $240 and I bought 2.08 shares. After 3 months, I had about 107 shares and $22,500 invested. This slow, steady growth is the foundation of my strategy. I didn't have to think or stress, the plan just worked. With this base, I was ready for the next step, generating monthly income from my shares. That's where covered calls come in. With over 100 Tesla shares, I wanted to turn my investment into monthly cash flow. Enter the covered call, a simple, conservative option strategy. Think of it like renting out your shares. You let someone pay you for the right to buy your stock at a higher price within a month. If the stock doesn't reach that price, you keep the fee and your shares. In stock terms, you sell a call option for every 100 shares you own, collecting a premium up front. This premium is instant income no matter what happens. The covered part means you already own the shares, so risk is limited. It's perfect for long-term investors who want extra income while holding. I started selling covered calls on my Tesla shares and began collecting monthly premiums without selling my core investment. This is how I generate $300 a month, turning a passive asset into an income stream. Here's how a covered call works in practice. I own 100 plus Tesla shares trading at $240 each. I sell a call option with a $270 strike price expiring in 30 days and collect a $3.50 per share premium, $350 total. If Tesla stays below $270, the option expires worthless. I keep the $350 and my shares. If Tesla jumps above $270, I must sell my shares at $270 each. But since I bought them at $210, that's a $60 per share profit, plus the $350 premium. My goal is to pick a strike price far enough away that my shares aren't called away most months. This way, I keep collecting premiums month after month. In March, I earned $350, April $320, and May $360 respectively, over $300 a month on average. It's a simple, repeatable process. Covered calls let me earn real cash from shares I'm holding anyway. That's the power of this strategy, and it's accessible to anyone with 100 shares. No strategy is risk-free, and covered calls have two main risks. First, if Tesla's price drops sharply, the premium you collect won't offset big losses in the stock's value. That's why I only use this on stocks I want to own long-term. Second, if the stock soars past your strike price, you must sell your shares at that price, missing out on further gains. You're trading some upside for immediate income. For me, that's a fair trade. I set strike prices where I'd be happy to sell. Understanding and accepting these risks is essential. Managing risk is about discipline and clear rules. Rule 1. Only write covered calls on stocks you want to own for years, even through downturns. Rule 2. Pick strike prices 15-20% above the current price to avoid losing shares unnecessarily. Rule 3. Sell monthly options, 30 to 45 days out, for optimal income and flexibility. Rule 4. Never get greedy. Stick to one contract per 100 shares and safe strike prices. Don't chase higher premiums by taking on more risk. This is a marathon, not a sprint. Consistency and patience are key. By following these rules, I minimize risk and maximize long-term income. That's how I protect my capital and sleep well at night. We've covered how to invest consistently, use dollar-cost averaging, and generate monthly income with covered calls. My $300 a month didn't come from luck. It came from a clear, repeatable plan. You don't need a finance degree or a lot of money to start. Even $50 or $100 a month can build toward 100 shares over time. Every dollar invested is a step toward financial independence. The blueprint is simple. Pick a great company, invest regularly, and use covered calls for income once you reach 100 shares. It takes time and patience, but the first premium payment is a game changer. Building wealth is a skill anyone can learn. If you have questions, ask in the comments. I'm here to help. The journey to financial freedom starts with a single step. Start yours today.